Thursday morning. Geez Louise, it's a Wednesday morning.
Good morning, Squadron.
Welcome
Welcome to the on-time, on-target morning brief. On today, Wednesday, September 23rd. All right, no new changes for today. Everything will be coming out tomorrow. Didn't get around to it today, largely due to a 2.5-hour Round Rock volleyball match last night that kept me out much longer than I anticipated because I wanted to get a bunch of stuff done. You just saw pop up in the chat. I would like to name the squadron. So if you want to be in on that, throw some ideas out. If you're embarrassed or shy, you can also text it to me. So looking for a cool name to go with the squadron. Ideally, over the long term, we'll have a patch. That is something that's coming out. Don't need to really roll it out with the new changes tomorrow, but it shouldn't be too far behind it. So anyhow, if you want to throw some ideas out there for a name, that would be good. All right, if you're joining us on replay, thanks so much for checking us out. If you want to come in the room on a trial, contact me at steve@ototnow.com, and I can get you in, and special pricing is $25 a month right now while that lasts. What you don't see on replay is there is a question and answer window. There is a chat room, and I also have the attendees list pulled up off to the side. So there's some banter going on back there. So when you're in the room, it's not just me talking, but if you do ask a question or bring up a topic in the chat, I am here to answer all of your questions. Pretty good deal for $25 a month. And we're here about 45 minutes every morning. All right. The rest of it's going to be a fighter pilot style brief. We have mission objectives. We're going to grow our money, protect our money, and live off our money. Our topic today is going to flow off yesterday. So yesterday we talked about annuities, why you would want one. I'm generally not a fan, but I get it. If you just want to go, here's a chunk of money, I'm done with it. Pay it back to me over time, and I hope I live a long life, and you will, win against the insurance company. If that's your thing, then do it. If it's not your thing and you like money and not handing it over to people, then you don't have to. But that was yesterday's topic. Today we're going to talk about that's not right. We're not talking about big banks and fraud. We're talking about insurance companies today. And then the question is, how much money do I need in retirement? So I've got some names that we are going to bring up here. Get this fixed so you can see it. There we go. I've got 6 names pulled up on the side, including 3 American names, a European name, 4 American names, overseas name, and then the ETF that covers it all. All right. For some reason, it's not coming up. But we're going to talk about that. That's really how you want to protect your money. If you invest in insurance companies, you're basically taking the house position. So you're making money when people buy annuities. You're making money when people buy life insurance. So all of that, you're making money because you're part owner of the insurance company. So we'll talk about that. As far as our flow today, it'll be long, short, open, short, long. Specifically, we're going to talk about long-term investing stuff first. We're going to go through around the world, talk about each of the markets, go down through the headline review, talk about what's going on here in the U.S., and talk about our long-term investments that we just talked about. Once we get within 10 minutes of the open, we'll switch to some day trading stuff. We'll pick some names. I will call out a trade for you. We've been going long lately, and today looks to be another green day. We shall see if that holds. So it was short for a couple weeks, and now it's back to longs. I have options for both today off my hit list. If you joined early, you get to see the chart that I'm looking at. That again, you have to zoom in or have a big screen to be able to see it. But the Schwab provides the gapping up, gapping down list. Again, we're looking 5 to 10%, and then going in that direction with our trade. Very profitable strategy. Highly recommend that you partake either in a paper trade or in real life, should you choose. All right, then we will execute the open and transition to Q&A plus question of the day. If you have any issues out there, contact me at steve@ototnow.com, and we'll get your issues resolved. And let's see, Burner, you're here again. If you freeze up again today, go ahead and type that in the chat. Because then we'll try to troubleshoot what's going on. Nobody else has said anything. I did talk to somebody else that was in the room yesterday, and they said it didn't ever freeze up on them. Lastly, before we start, disclaimer, the information provided here is educational only. After your own due diligence above 4, you take action here. Copy that, Burner. Good morning, Silver. All right, here we go. Let's go up to the TD Ameritrade Think Pipes. I have this pulled up first. Before we look at the overall market, I just wanted to point out Luckin on the right here, the name that I like, Chinese coffee, was supposed to take over, compete with Starbucks. Stock was over 40, fraud allegations, it got crushed. It went down to the lowest entry that I got for people was $1.12, I believe. My own personal entry from all the shares I have is somewhere below $2, just barely below $2. So needless to say, I was a little bit pumped yesterday when the stock goes from 254 to 3, and it's already up at 315. Now it's pre-market, that may not hold. And now there was a trade down at 3. I do expect this name to go higher. If you want to trade it long, you can. If you're in the room and you have a lot of it already, you don't need to trade it long. You've got enough exposure. But what's moving that stock? China came out, and after long last, because we've been talking about Luckin for April, I think, is when it stopped trading, and then it got delisted. All the bad. We're about 6 months into this. They came out yesterday, and China said, "You're bad. We're officially levying our fine on you." Now, investors lost, I think, $6.2 billion in the drop from $40 down to below $2. China fined Luckin Coffee $9 million. Yeah, that's right. That's an M. Yeah, $9 million. I have to think they were sitting around the Luckin boardroom looking at each other going, "Is that a typo?" Because seriously, go get it out of the vault right now. Pay the government before anybody changes their mind. $9 million is a complete dust into the pocket of a company like that. So pretty amazing, and that's what's going to move the stock higher. I don't know. I'm not making an epic call. It's going above $5 anytime soon, but it's certainly going to move higher while people realize that now they've been penalized. So they did the crime. You do your time, and when you're done doing your time, you're back. So if people start to believe in Luckin again, get ready to hold on and slap some high fives, because we will be making some money in that name. All right, other names out there, kind of a funny Tesla battery day we had yesterday. It's just easier to look at the chart sometimes. So yes, this is 2 days ago, had the big, huge dip and then came all the way back up. Then the drop in the aftermarket yesterday kind of traded sideways. And then this was last night, big battery day, and then the big sell-off, and now it's back. It's like, what's going on? So Elon Musk, we'll talk more about it in the headlines, but Tesla flopping all over the place. Was down 5% this morning. Doesn't look like it's holding that. The next one is Aurora Cannabis. They crushed earnings yesterday, so the stock goes from 640 to 750, and then they had their conference call, which, oh my Lord, if you're not ready for prime time on the microphone, hire somebody else to talk for you, because these idiots took to the mic. You have to realize that is some feedback for you to go home, look in the mirror, and go, what kind of skill do I have of answering questions in public while I'm talking after a 18% up day move, while I'm talking and answering questions, the stock drops and everything that it made. Horrible. Do not talk. Hire somebody. So we shall see what happens with those guys. But that's not the point. Let's look at reviewing where we have been in the market. Again, I'm saying we were going to hold between 300 and 320. Again, market always proves me wrong. And it actually was up yesterday and a couple of days prior. I wouldn't get too excited about this bounce. This is not, somebody asked me yesterday, what are you buying? I'm like, not much. I'll buy what I have to, or people tell me that they need to buy something here. I will, but for the most part, we're just holding what we got. I've already trimmed out most of the dead weight, Exxon, some things that just were not working, but the rest of it, hey, we're holding. Apple's made a big comeback the past couple of days, and along with the rest of the tech. So we'll see if that holds. If you have Apple, Amazon, or Google, you can plan on holding that through whatever happens. If the market drops 90%, you're going to hold those names, and we're going to be buying more hand over fist. There's some other names I can part with along the way, but those are the big three that we are going to hold pretty much no matter what. So that's where we are. Let's look at the past 5 days. So pretty much straight down. We kind of broke that on this day, was up a little bit, and then nice decent move up yesterday. So are we back in an uptrend? I wouldn't get too excited about it, but yeah, technically. We'll see. I could see today being up big because a little euphoria and people thinking, okay, the bottom's in. I don't think the bottom's in, so I'm not buying. But there will be people that buy today, and the market will roll over, if not today, sometime this week is my guess. But we'll see. All right, let's look at the earnings calendar. What we had last night. We talked about Aurora Cannabis crushed earnings and then answered questions. Oh my. Yeah, so they're down big. A couple other names are down big with them sympathetically. Let's see, JKS beat earnings. Nike was probably the big dog yesterday. They beat earnings and their stock went up 12% based off of that. Some other retailers like Under Armour are sympathetically moving higher based off of that. General Mills beat earnings and Stitch Fix whiffed earnings, so they're down pretty big this morning. All right. So that's what we have going on for earnings. There's back to our trading chart. Let's come down to CNBC, see where the markets are. Let's get the right switch and no, there it is. All right. And we're going to refresh real quick. Okay, Dow's holding pretty steady at about 200 up is really what it was. So 0.6 up on the Dow. That's good. S&P in the green. NASDAQ barely in the red, so we shall see. Again, this is largely tech, so I think we're going to still see tech move higher. But well, that's what keeps it interesting. Europe largely in the green after being kind of ugly from the Brexit issues the past couple of days, so recovering from that. Asia, pretty flat except for Australia, up pretty significantly. And then U.S., these are our numbers from yesterday. You can see the big move up in tech. Amazon was up over 5% yesterday, which is kind of crazy. You know, if you don't have Amazon and you're thinking to yourself, gosh, it's expensive here. I don't know. It's at $3,000. Buy at least one share, because when you're 20 years from now, when we're slapping high fives this morning, it's going to be at 30,000, right? So you don't care 20 years from now if you paid $2,800 for it or you paid $2,600. You literally do not care. There are more things important in your life. Like right now you care, but you need to know 20 years from now that you bought Amazon 20 years ago. So don't look backwards in time and thinking about, well, I wish I'd have bought it then. You can't go back in time. So that's why we keep those big names, is because we are going to just absolutely, like you've seen in Apple, just collect year over year of these huge returns if you pick the right company. If it takes a nosedive on you, you got to get out of it. Starbucks. I spoke highly of Starbucks for years. Starbucks kind of got turned into a political football there for a while with their former CEO making a presidential run. So I was like, whoop. We're done with Starbucks, and I'm still not back in. So, except for a little bit, but not much. All right. Let's talk about bonds this morning. Not a whole lot of movement in the bonds. Oil still a little bit below 40, but not too far. Precious metals, people are like, hey, every day is a good day to buy gold. That's what the CNBC commercials say. Yeah, it's been selling off across the board for the precious metals. So will they move up to the election? I don't know. They've already moved up, so I don't think that's a no-brainer by any means. So 40-some days out from the election. All right, let's look at some headlines. Elon Musk, if you want to see a funny video of him dancing, just Google Battery Day presentation. So he gets out there and he dances. I'm like, that's interesting, but good for him. He put out a memo a few days ago saying, hey, we need to go all hands on deck. And then, of course, that gets leaked out to the press. So they're going to try to crush this quarter. That's kind of leadership 101, and he's pretty good at that. What he did yesterday, though, is prior to Battery Day, he tweeted out, hey, all the stuff you see today isn't really going to be around until 2022. And that was like, wah, wah. So we'll see. But his big issue here is kind of some of the stuff we've been talking about with batteries. Remember, we talked batteries as a service. That's what NIO's trying to do. Musk is talking about putting batteries into the actual frame. It's kind of hard conceptually to think about that. So think about the house. So when you build a house, right now we build houses and we strap on solar panels. So that's about the dumbest design ever. So they've gone to new houses to where you build the batteries and all of the panels into the house from the get-go. So it shows up with them. So you're thinking of the same thing for a car. Instead of having batteries where you open the trunk or the frunk, if you got one of these, that is literally what it's called, a frunk, to where, nothing's up front. So that's where the trunk is. So you pop these things open and you snag the batteries and you swap them out. Well, they're like, well, why not on the chassis build the batteries in to the car? I think that's not going to be smart because cars get in wrecks quite a bit. And, the cost goes through the roof there if you got the batteries, in the actual car itself. But I don't know, we'll see. But interesting stuff falling out of that. He says he wants to make a $25,000 Tesla. So from a consumer perspective, I think that's a pretty smart move. Don't forget Saturn did the same thing and put themselves right out of business by trying to make cheap cars. So I don't know. Pay attention. They're not around anymore from doing that. So that's really not what I would try to do. And if you think from an investment standpoint, I would rather them sell these stupid expensive cars that they don't make that many of. So there's a stupid high margin. So the stock price goes up. That's how you should think as an investor. So I don't know what he's thinking there. He's still trying to change the world, and good on him. But a $25,000 car, I don't know if he can make that and make money doing it. So we shall see. All right, we did get avoided the government shutdown. Stimulus is back in talks. Again, I think this will be hijacked by the election, but I think both sides will come out and talk about how much we need. It's going to be pandering to, pandering for votes, basically. But we shall see. I think actually it might be dumb enough to where checks get sent out again. I'm not saying, I shouldn't say that's dumb because there's people who need it, but I think this round of stimulus should be kind of focused on those that really need it, not necessarily, hey, pretty much everybody except for those that, made too much to qualify. So my opinion, we shall see how it goes out or how it goes down. All right, what else we got going this morning? Wealth tax. If you've been a long-term Florida resident, and I think one of you has been, I was a Florida resident for like 10 years during my active duty career. They had a wealth tax. I had to actually report my wealth, and fortunate to have wealth in my 30s. But yeah, once you got over about, I don't know, I think it was 500K or something, you had to actually report it and were taxed on it, which is like, what? Jamie Dimon's point is that's almost impossible. Literally, if each of you sat down today, Zoom. If you sat down today and tried to figure out your net worth, it's plus or minus 100K. I mean, literally, you can't nail down the prices on some of these things, right? What's afterburner financial worth? Whatever I say it's worth, right? Six times revenue is what most people use, but that's kind of a dart throw. So anyhow, so he says tax income, but a lot of the rich don't have income, or take $1 income and then take the rest in tax deferred compensation, that sort of thing. So anyhow, the rich will kind of always figure out how to circumvent the tax code. All right, Nike, we talked about. All right, let's roll over into insurers. So we talked about there's insurers, so insurance companies out there. They're the ones that are writing, obviously, your intangible tax, right? I thought you might chime in. It sucked. Yeah, why am I paying this? I'm not even 30 and I'm paying Florida some stupid money. Anyway, tangent. So they got rid of it, by the way, somewhere along the line. They got rid of it. All right, back to insurers. So we talked yesterday, annuities, all these insurance contracts, they don't write any one of them, not one do they write with a negative expected value. So of course, insurers would make money over time. So we're gonna look at Prudential first. I have some of this in the book, I inherited it, and it's got a zero cost basis. So if you ever get something that doesn't have a cost basis, you're gonna pay taxes on the entire amount, which is not good. When it dropped from 90 to 40, it's like, hey, can I sell it now? And they're like, no, because it dropped over half. I'm like, okay, so we're never going to sell it. So, but that's okay. So hold it till death. You can see how it's performed when you think about really how these companies are priced, 7% dividend. So it pays out a huge amount. And then, forward PE of 5, it's currently not profitable right now. So there's your negative earnings per share. These are not numbers that anybody gets excited about. This is a chart that nobody gets excited about. So, I mean, it's dirt cheap. It's not going anywhere. So from a value investor, if you wanted to roll in and buy this because you like getting 7% while you watch your stock do nothing but go sideways for a decade, that's for you, right? At least you're making 7% while you wait. Their dividends are safe. They're not going to cut them. They would already done it if they were going to. So that's Prudential. Let's share out some other names that you know, like MetLife and Aflac. So what you will see is charts that are mirror images of each other. You have Prudential. Yep, we talked about that. Hey, there's MetLife doing the same thing. Huge sell-off. And then same thing with Aflac. I think I might have said that earlier. I meant Aflac, AFL. So here, what's the issue here is there are risks in insurance companies. And we had COVID-19. Well, you also risk them paying out so much to where the insurance company actually goes broke. So if you didn't know this, there are also reinsurance companies. Like, say what? So I found out this years ago. I invested in Greenlight Capital, David Einhorn, if you know that name, billionaire, most famous for shorting than going long. But he started Greenlight, and he was a reinsurer. So there are insurance companies pay these reinsurers to stay solvent in case something like, we get 15 hurricanes all at once, and boom, everybody files their claims, and the insurance company's like, sorry, out of cash. Well, they have insurance. It's called reinsurance. So that's how that works. And the biggest reinsurer in the United States is this fourth panel right here. I know you recognize BRK /B because that's Berkshire Hathaway. So /A is the original share, which is, I don't know, 300,000. But B is the split multiple times, multi-split, whatever you call it, to keep it affordable, is down at $200 a share. So a reinsurer is kind of like, insurance companies basically print money if they get the risk right. A reinsurer prints money off of the company that's printing money. So Buffett, being a touch smart, got into this business early, and he's the largest in the United States, fourth largest in the world. There's also Lloyd's of London, and there were some other Swiss reinsurance is the largest in the world. So think big bankers sort of thing. All right, the one down here you probably don't recognize is LFC. That is a China insurance company. So I'm like, well, how do things go in China? Kind of about the same. I mean, they're not mirror images like these are, but pretty much the same. But if you want to get in on insurance in China, I've got a name for you. I would not do that, but hey, if you wake up and say that's your thing, LFC goes right into the portfolio. Just not a whole lot of it. And if you want to take advantage of all of it, I don't know why KIE is not coming up. You can see it coming up in the chart's not coming up, the name's coming up. So you can kind of see their Spider Insurance ETF. So it is the thing. KBE is the banking one. KIE is the insurance one. So if you just want an insurance as a whole, buy that. I do not recommend that. I was in that for a long time and did nothing but leak and lose money. So it kind of made me mad that I'm out. All right. As far as our long and short names transitioning, we have Nike. We'll take a look at Nike first, up 12% earlier. So again, we're out here on about what's that, 3-month chart. So crushing earnings. You see all the gapping up noise. I think it's gone too far. So 116 up to 130. I don't think it's got a move left in it. Nor would I necessarily buy it here, but their online sales went up I think it was 82%. That's a number from memory. It's probably buried in there somewhere, but obviously that's going up. So you start looking for sympathetic plays that get drug up with it. Under Armour's one of them. Lower volume, 1092 to 1129. I like this chart a lot better because it's merely retracing where it was, and then its earnings at the beginning of August. So August, September, October, beginning of, they're about halfway to their next earnings period, a little over half. So anyhow, so it's kind of projecting that they're going to hit their next earnings. So I could see that moving higher. So I like it from a long perspective. All right, let's look at JKS, which is Jinko Solar. See if it's got the volume. It'll have the volume by the time we get there. 2766 up to 28. It's in new ground territory. Earnings beat, robust outlook. So if you want to partake in Jinko Solar, you can. I'll probably just watch that one myself. FRLN was a headline to some logistics. Yeah, why'd that go back? Come on now, FRN. Is that right? Friendly ice cream? I don't believe that's right. FLRN, that's what it is. FRLN, learn to type. There we go. Freeline Therapeutics, hardly any volume. It is gapping up, so we can't play that because it doesn't have the volume. We'll look at CNTG, which is another long Syntogene, no real volume here, so we can't really play that either. I like that chart, though, for going higher, but not the volume. We looked at Under Armour. Okay, let's look at some shorts. Stitch Fix is the big one that's cratering. Plenty of volume, 31 down to 26, so kind of a big move there. It's what, 14.44%. You can see it over on this chart. Why I brought it up though, I mean, look at where the chart is. It could fall, free fall down to here, and it's got a lot of room to the downside. So normally I don't like that big of a gap because it's outside of our realm and we like to stay disciplined, but I do like it. So we'll keep that up unless something else beats it. SCS. Steelcase, low volume, no bueno. AXP, American Express, got a downgrade. It's probably not moving enough. 98 to 97. That's only 1.5% or so. So that's not really enough to trade on. All right. WM is Waste Management. Very popular name. Low volume, gapping down 1%. That was a downgrade as well. Let's look at ACB, which is the guys that took to the mic. I think they're co-CEOs, which is already a problem. Like, we can't pick a boss, so we're going to be team leaders. And then they, wow, 732 down to 615. So basically in free fall, I mean, that's just heinous. So 16.5% is what this says. Again, that's out of the window that I like, but we're going to keep an eye on it because that has just been a house of pain over at Aurora Cannabis. And then Tilray is the sympathetic one that a lot more people like. See if it has the volume. It will by the time it opens. So 5.36 down to 519. Lower price point, so you could get in and kind of get pretty surgical with this if you like having that, 6-7 cent stop. So we'll keep it up there as well. So if you're starting to set up your boards here, think Under Armour long is a sympathetic, and then the two shorts we're going to have pulled up are going to be Stitch Fix and Tilray, excuse me. We're going to pass on ACB, but we might go back to it if we need to. All right, let's take a look at some movers. Tesla down 3%, Wave Life 30%. Nothing else in our 5 to 10 category. 3 minutes to go. There's Nike up at 11%. Yeah, I think it's just gone too far. That's why I think Under Armour is a better long play. So if you're in an IRA, you can do Under Armour where you can't short. Legend doesn't. Where's the volume? No volume. Snowflake back up. It has the volume. I wouldn't touch it. It just IPO'd, so it's going to flop around all over the place. I mean, it'll move. If you have something that moves, you'd want to do a collar or a straddle. That we're not going to even get into that today. All right. Volume, Wave Life, 30%. Not touching it. GenMab. Check that out real quick. Okay, it's got the volume, 38 to 34, so it's right at that 10% down. Woo, like that chart. That's got room to play on the downside. So GMAB minus 10, that's going to replace Tilray. I like that better than the Tilray. Tesla we aren't touching. Amazon a little bit. All right, a couple more to look at. 2 minutes to go. Where's our volume? Pivotal, PIC, I haven't heard of them. All right, and then last chart, then we get set up. All right, volume. Western Digital. Video recording systems. We'll put it on the watch for the long, but not something I'm going to take right away, so we'll just have to take a look at it. All right, let's go over to TD Ameritrade, get ourselves set up. Again, if you're going long, Under Armour, if you're long only, say, you're in an IRA or something, then set up for that. Otherwise, I'm going to set up for Stitch Fix and GMAB, if you will. All right, is that correct? Share, yes. All right, so SPY on the left, 30 seconds. So we got UAA. We're on a 5-minute chart. We'll fix that in a second. And we got Stitch Fix and GMAB. I'm looking at GMAB first, so you know. All right, welcome everyone to the on time on target play of the day. 3 charts. We got Under Armour long taking that down to a 1 minute off a sympathetic earnings beat off of Nike. We have Stitch Fix is short. So there's the opening bell, and GMAB is short. I'm looking at GMAB short first. Again, I can't remember the headline. There's the opening bell. So it's long here, short, and then short. So some profit taking in the shorts. You can see Stitch Fix down 12%, GMAB down 10%. So I like that they're going up here. That's a short cover. That means it's set up nicely for us. Going to another screen to see if I can catch that GMAB headline since I cannot remember anything this morning. All right, we know about Stitch Fix, missed earnings, GMAB, binding arbitration, some legal stuff is what that's saying. What's going on over here in Under Armour? Nothing's going on. All right, these are going higher. That's all okay. We're going to wait for them to come down and then enter. Again, like in GMAB, the best here. It's got the volume. We look down here, 80,000. Here's 300,000. So all kinds of people in Stitch Fix. Okay, this one's starting to walk back down. We're going to go 34.40. And that's going to require a 25-cent stop. So you see 25 goes right above the high of the day. And if it continues higher, then we simply have to wait and get a better entry. Right now we're waiting on 34.40 short with the 25-cent stop. And staring at it, nothing's happening. So let's move over here. There's your market. Again, here you look up here for however the overall market's doing. So the SPY's kind of even, flopping around towards even. All right, this is starting to get back here. All right, 34.50 is what we want. This is I would call this a perfect setup. That doesn't mean it's going to work. So you still, we're gonna use 1R, risk 1R to try to make 3R. So if your R is 100, you're risking $100 to make 300. That's our goal every day is 3R. And we made 3R yesterday. Okay, here we go. Here it's coming down. So 34.50 is where we're taking it. And 34.75 is our stop. So it's a 25-cent stop. So it'll have to go all the way down to basically 33.75 would be our 3R point. I'm tempted to take it here because it's going to go, when it goes, it's going to go shooting straight down. Be impatient. But we got to wait on it. Can't just throw a dart and hit the entry. So Stitch Fix already went down. It would have been a 27.70 entry. So don't know if that would hold. Their Under Armour finally went higher a little bit. We're still waiting on GMAB short. Getting close. I'm taking it, 34.51. I'm taking it. So we are in this trade, 25-cent stop. So 34.76 is our upper bound. So we're taking this short. So I draw the arrow for you every single time. So there's no confusion because sometimes things can move fast. And I've gotten feedback that I talk fast. So that's not going to change anytime soon. So we just try to keep things clear for you on the chart. So we are in GMAB short. I actually really like this as well. So we may do 2 short today. We use 27.70. Oh, 80-cent stop. I don't know if I can do that. Oh, I don't want to do that. That's too big of a stop. The Under Armour, meh. All right, I'm not going into Stitch Fix right now. Let's look at some other long names that are out there. See what Nike did at the open. Sold off is what it did at the open. So it's actually sold down almost to the, well, it did sell down past the 10% point. So you could take Nike higher here. I wouldn't. Now, if this was all green over here, you could go, yeah, let's take Nike because it's going with it. But this, we're 5 minutes into it. That's not all day. But you see these big dojis sticking up. That means there's trying to go higher, can't. Trying to go higher, can't. So, yeah, market's probably going to continue lower. We'll see. You don't know for sure. But, of course, I say that, and there goes Nike rocketing higher $1 while I'm talking. All right. Are we going to take an entry at 28 with a 60-cent stop? All right, let's take it at 28.1 with a 50-cent stop. So there it is, 28.10. This is a short trade. We're going to go with a 50-cent stop. So we're in 2 trades now. 28.60, make it 28.62 in case somebody has a limit set there at the high of the day. We want to be just above that. I'm going to call that 50 cents, even though it's technically 52, and I can't do math on the fly with 52, so we'll just call it 50. So we're in 2 trades now. They are both short. We got GMAB. Here was our entry point. So right now, a little bit in the red on that trade. And Stitch Fix. We're in the green here on the trade. So let's get optimistic. So 28.1 would be 27.6. This would be our first R. 27.1 would be our second R. And then third R is off the chart. So really like that entry. That's 5 minutes of backing up, short covering, and then turn around and rolling over. So we shall see. All right, Nike's going back higher. Not going to touch that. What are some other names? JKS, Jinko Solar was a long name. Up over $1. Well done. We like to see this when you're in shorts. Don't like to see that for your long-term investments, but all right. Jinko, what other long names? FRLN, that's the one I couldn't type earlier. No volume. No volume. Let's go WDC, Western Digital, putting cameras on a bunch of their terminals out there, going with electronic camera systems. So that's a pretty nice move. Up almost 10% though. It was up about 5%. So that's certainly a tradable move higher. We didn't get that one. I wasn't looking at it. All right, Stitch Fix, we're in short. We're in GMAB short. Let's see what ACB did. So now all 3 screens are going to be looking at shorts. Aurora Cannabis. This is the one that if you remember the chart, we'll just back it out because it's just too funny. Boom, we crushed the numbers. Boom, we started telling everybody. People not liking it. So down 18%. Tilray's a sympathetic name, meaning it follows it and all the ETFs and things. So you see the big move up. Look at that. Oof. Well, that would have worked. That's a 5-minute chart. Let's make it look like the same as the rest, but it still would have worked. Hey, man, nice shot right there on Tilray. All right, both of our trades are working against us, so we shall see. Keep your stop in, and you get what you get. All right, LKNCY. Look at that. Boom. 9% up at 315. So opened at 3. I said don't take it long, and then look at, you could have taken it long at about 305, 5-cent stop. It'd be close to being out right now. Again, 9 million. It's just like, come on. The only downside I saw that to the 9 million on Luckin was there was a lot of people out there saying, so the Chinese government was in on it. So it's like if you're the judge and jury and you give a super light sentence, it's like, are you on the take too? And I know we don't trust China right now, but yeah, what? 9 million for a company that size? It's like, oh my goodness. So anyhow, but it's making, hopefully that the drama's over and the stock rockets higher from there. All right, I'm gonna go to look at a different board while you guys can monitor those trades. All right, Micron up 3%. Market's basically mixed. The SPY's about even. That's in the upper left up here. You can see it right there. NASDAQ's in the red, 0.5%, and Dow's in the green, 0.5%, largely Nike. Lockheed Martin's up. Tesla down 4.3%. All right, looks like some trades are busting out, so let's own that. So we are out here. Went over the high of the day. Generally, when things go over the high of the day, they continue higher. Of course, as I say that, it does not going to do it. But so yeah, you put it over the high of the day, and if it beats it, then it's out. This one is still working, so we shall see if it rolls over. All right, back to what I was talking about. Tesla off 4%. Other names do we have here? MJ, which is the marijuana ETF, is down 2%. I think I'm a buyer of the marijuana stocks going into the election, especially with a 20% sell-off today. Again, why the investable thesis there is clear. It's not that everybody supports it. It's the fact that they support the revenue. So think online gaming, marijuana sales. Both provide revenue to the states. So I think there's going to be a lot more legalization. All right. That's about it off of the chart. We're going to leave this for a second. We're busted out here. We're still in this trade. So let's look at overall what's going on. Okay, lucking up 7%. We know about that. MMEDF is a psychedelic name, not a marijuana name. Twitter up 5%. There's got to be a headline associated with that. Just checking out the headline on Twitter real quick. It's all legalese associated with the battle with Facebook. There's about 20 headlines on it. So not going to try to decipher that real time, but obviously you're seeing favorable. Let's see, Shell, that's a EV name. Coal's getting some love. So a lot of names in the green for a flat market. And let's see what we have in red. Workhorse selling off 7%. That's not good. Pretty much sympathetic with Tesla there. Canopy Growth, another marijuana name. That's an option we're looking at there. Northwest Bio off 1%. Pretty well, not much else moving there. So, all right, let's go back to our trade, and then I will go through the chat. And, busted out of our trade. 0 for 2, so down 2R. So good thing we made 3R yesterday. So market's too strong for us to get in these shorts. So we'll keep them up for a second while I'm talking here. All right, the question of the day is how much money do I need in retirement? So that is a good question, and that's something everybody should think about unless you're in retirement. If you're in retirement, you got what you got, and you have your cash flow, and you adjust your life based off of your cash flow. Does that make sense? Maybe I should have said that slower. So when you're in retirement, no matter how you played the game along the way, whether you did well and have millions or whether you don't and you have tens, whatever, you are making it work. So at the end of the day, we're humans. We'll always make it work, or we'll fall back on family, or take whatever the state gives us, whatever, right? Where we adapt to whatever our cash flow is. But before you get to retirement, I don't care, even if you're as young as somebody in high school that's in the room, is think about what kind of retirement you want. If you are going to retire in, a upper middle class home, that's, 300,000 to 500,000. It'll be more then, but you can adjust, you can base everything off today. So if you're going to have a $300,000 to $500,000 house, kind of that upper middle class, good life. We're doing a little bit of traveling, but not, African safaris, and doing, family and friends sort of stuff. You can make it with basically around 60, 70,000 a year. But that's the number you start with, is how much money is it going to take in today's dollars? You don't have to try to do any inflation math, because the system takes that into account. So just think today's dollars and say, what does my retirement look like as far as how much I'm going to spend? So obviously there are some people that if you pay down your house going into retirement, good for you. Half your house payment goes away. The taxes and insurance does not, so you're still paying that. But whether you have a house payment or not, the math all works out the same. So if you think conceptually, you're going to spend in retirement about $10,000 a month. That's $120,000 a year. So pull out a piece of paper and write down $120,000 at the top. And then next is you calculate Social Security, which again, you can claim Social Security anytime between age 62 and 70. When you claim it, the government is agnostic to when you claim it. It's based on life expectancy. If you want to claim it early, it's fine. Yes, it increases 8% per year, but also if you take that money and invest it, you're going to make standard market returns at 10 to 12% over the past 100 years. So, you're taking the risk on yourself there. But if you take it early and then invest that money, you can be better off than waiting and take it late. And if you die in your 60s, then you've at least got a little bit of money out of the system versus those that wait till 70, pass away at 69, and then look back. Well, they don't look back, but their spouse might, and go, guess that didn't work out like we thought. but you don't have control over a lot of those things. But on your piece of paper, write 120,000 at the top, and then when you subtract out your Social Security, you can go through ssa.gov and get an actual estimate as long as you have earned income. So one of you will not have earned income yet, but the rest of you will. You can get that estimate. For today's purposes, we're going to use 40,000. So if you're married and you have a spouse and together you're going to get about 40,000. Some of you, if you're in six-figure plus jobs and have been for years, you're going to get more than that. But again, everything's in today's dollars. We'll just use for the example 40,000. So 120,000 minus 40 is 80,000. So take that number times 20. That's basically 5% living off the change, but reversing the math. That number times 20 is the amount you need for retirement. So if you need $80,000 a year, times 20 is 1.6 million. So that would be the number that you're chasing as far as your investable assets. Don't count your house in that, because your house isn't sitting there spitting off 5% in income. It doesn't generate income. You need to have stocks and bonds to do that. So that's your portfolio on top of whatever you have for your house. And that's why I tell folks, if the interest rates are below 4% or below, don't put a bunch of money into the house, because that money's not spitting out 5% anymore. Now it may be appreciating, but you can't like reach out and withdraw it, right? I mean, home equity, you can get into some fancier stuff, but you don't want to, right? So 1.6 million would be where you want to be. So maybe you have a pension, which might be smaller or it might be large. I'm retired military. I have what most people would consider a fairly large pension. So do that math, 120,000 in retirement. Subtract out the 40,000 that we anticipate that we're getting from Social Security, so that's 80,000, and then say you get 55,000 a year in retirement. So put that number next, subtract that from 80,000, that leaves 25,000. So yes, I'm telling you, if you need to cash flow 25,000, you take that times 20, and that gives you 500,000. So if you have a portfolio of stocks, dividend-paying stocks and bonds around that 5% level, then you only need $500,000 and you'll be able to stopgap that 25K pretty easy. That's where a lot of people would just prefer to buy an annuity for the last 25K. So you can do it with 500K, keep your 500 and invest it forever, and it'll kick off this amount. And yeah, you're going to be in bonds. You're going to be in boring stuff. You're not going to be in Amazon. You're going to be in boring Prudential, right? Paying it's almost 6.9%, right? So you're going to be in boring stuff that's going to kick off income for you to live in. But that's okay. You're in retirement. You don't need to be excited by that. You can have a fund money account and do whatever you want with it with 50K. But the big money needs to be serving you by generating that income. Or an insurance company will do the same thing and say, well, we'll sell you an annuity starting today, in retirement today, at whatever time that is, and pays you that $25,000 a year, which is $2,000 and change a month, and we'll sell that to you for $700,000. So you say, okay, give them the $700,000. They're basically making $35,000 a year off your money, and they're paying you $25,000. That's how they make it. But you've passed the risk at that point. So if you want to do that, that's fine. If you don't have a pension, then you're looking at, that's where people say you need $1 million. Well, yeah, if you're going to live the same lifestyle you're accustomed to, if you're an upper middle class person, then you are going to need at least $1 million. If you're kind of just steady middle class, pretty modest needs, then you don't need $1 million. 500,000 is fine. If you have pensions, well, then pretty much if your pensions cover your expenses, then any money you have on top of that is kind of gravy. So those are the things to think about today for how much you need in retirement. If you have any questions on that, please reach out to me. All right, one last review of the market here. NASDAQ's barely in the red. The other two are in the green. Dow's still up 0.5%. So, all right, thank you so much for listening. Big changes coming to tomorrow. Hopefully I get to all of them, but we shall see. Again, if you can think of a good name for the room, come armed with that tomorrow, and we shall come up with a name for the squadron. And with that, I will leave you guys. Thank you so much for stopping by.